welcome everyone to the Office of Economic Development Business Information Session. My name is Margaret McGee and I'm the Business Services Manager. Business services assist entrepreneurs and business owners in starting and growing their business. We help in navigating the different processes through the city government departments, and we also help with obtaining permits and licenses. We connect the business community with organizations that can provide technical assistance, incentives, resources, and other programs beneficial in operating a business. One way we do that is to host business information sessions. These sessions are held throughout the year, and topics are gathered from entrepreneurs and business owners and different surveys that we provide. This is a series of 3 sessions on emergency preparedness and insurance. Today we have Commissioner Donnellan with the Louisiana Department of Insurance. He will provide information regarding the insurance options and different programs that may be available. To keep distractions down, we ask that the attendees please turn your video and mute your speakers. We ask that you place any questions in the chat box and we'll get to them at the Q&A section. All handouts or any information provided will be passed along to all attendees within 24 to 48 hours once it's ended. So now I'll go ahead and turn it over to Commissioner Donnellan.
Thank you so much, Ms. McGee, and it's indeed a pleasure to spend this hour with you and your viewers and present on what we're doing here at the Department of Insurance to help policyholders, particularly those located below I-10, I-12 from Texas to Mississippi, deal with the ongoing crisis in the insurance business. And I full well recognize that this crisis is driving folks to the brink of turning in the keys to their homes in many areas because of the unaffordability of homeowners insurance. The hurricane seasons of 2020 and 2021 were particularly catastrophic and had a devastating impact on our insurance market. Following 15 years of relatively uneventful storm seasons, Hurricanes Laura and Ida were 2 of the most powerful tropical events in our state's history. Both Category 4 storms had 150-mile-an-hour winds when they made landfall. Laura in Lake Charles and Ida 1 year and 1 day later in Port Fourchon in the center of our coast. Because of our central location in the Gulf, more hurricanes make landfall here on a per capita basis than any other state. In fact, 4 times more named storms have made landfall in our state over the past 100 years than on a per capita basis than Texas or Florida. Insurers paid or reserved to pay $24.5 billion on all types of claims related to Hurricanes Laura, Delta, Zeta, and Ida. $13.9 billion of that total was for Hurricane Ida claims through September 30 of a year ago, and the remaining $10.6 billion is for claims primarily from Hurricane Laura, but also Delta and Zeta as of September 30, the year before, 2021. And those claims numbered 800,000 total for all 4 hurricanes. That compares with 15 years earlier when insurers paid out $23.3 billion for insured losses, wind losses alone for Hurricane Katrina in Louisiana alone. And then 3 weeks later, our second most expensive hurricane at the time, Hurricane Rita, made landfall in Cameron Parish in the southwest corner of our state and cost insurers another $3.3 billion. And the total claims filed for Hurricanes Katrina and Rita was 1 million claims. Those do not include flood claims, both of which Katrina and Rita resulted in a huge amount of flood damage to our state. And the NFIP, National Flood Insurance Program, ended up paying $16 billion for insured losses caused by those two hurricanes. But following the devastation from the hurricanes in 2020 and 2021, added to by a man-made property insurance disaster in Florida, non-insurers doing business in Louisiana, Gulfstream, Access Home, State National Fire, Americas, FedNat Mason, Lighthouse, Southern Fidelity, Weston, and UPC went into insolvency, and many others stopped writing new business. I want to point out that of those 9 companies that went insolvent after Katrina, after Laura, Delta, Zeta, and Ida, 5 of those were domiciled and therefore regulated by the insurance commissioner for the state of Florida. And we're also doing business in other states, 6 other states, including North Carolina, South Carolina, New York, Alabama, Mississippi, and Louisiana and Texas. Let me take Alabama and Mississippi out. I'm not sure about those 2, but for certain, Texas, Louisiana, South Carolina, North Carolina, and New York, in addition to their home state where the bulk of their business was, of those 5 Florida-based companies. And one other was headquartered in New Orleans on Parger Street, called Americas, and primarily did business in our state, although they were also doing business elsewhere, but had re-domesticated themselves from Louisiana to the District of Columbia. And when they did that, they made the District of Columbia their regulator for their solvency, and no longer was under the supervision for solvency monitoring of myself and my department. After their failure, the District of Columbia, with which I have an excellent working relationship, called me and said, "Look, Commissioner, this company and all of its policyholders, virtually all of them, are in your state. Why don't you handle the insolvency of that company?" So we did. And of course, we have 225 employees. The District of Columbia has 85. And we regulate over 100 companies that are domiciled in Louisiana, all the way up to and including the 49-state Pan American Life Insurance Company that sells half of its policies to foreigners in countries outside of the U.S. and is primarily regulated by our shop and has been for over 100 years of their existence. But the District of Columbia has a very small domestic market and not much experience in handling insolvencies. So prudently, they turned that insolvency for runoff purposes and handling of the claims over to us. And when we got into that company and looked at their records, we found that they had submitted false financial records to the District of Columbia prior to Hurricane Laura, that if they had submitted truthful and accurate financial records, they would have been out of business as insolvent before the first of those hurricanes in 2020, Hurricane Laura, even made landfall. But that's looking backward. Those 6 companies from other states resulted in 54% of the, as I call it, orphaned policies in Louisiana, like my own policy on my home in Metairie, that had been with one of those failed companies for 10 years before its failure. The orphaned policies from those out-of-state companies constituted 54% of the policies left behind by the non-failed homeowners insurers. So that's how we got here, and here's how we're addressing the crisis. the first part of what we're doing to address it is what we call the Louisiana Incentive Program. And that program is copied from what was done under the leadership of former Governor Kathleen Blanco in the immediate aftermath of Hurricanes Katrina and Rita some 17 years ago, and was very successful. Governor Blanco called me back then. I had just taken office 4 months after Katrina made landfall, and offered from the surplus that state government was experiencing as a result of the huge rebuild, not just of the 27.6 billion of insurance payments that were made by private insurers, and not just from the $16 billion of flood insurance coverage that was paid by the National Flood Insurance Program, but also from things like the $15 billion that was being spent to improve our levees and flood walls and pumping capacity to prevent another flood catastrophe, as Katrina brought to the city of New Orleans, happening again in the future. All of those efforts and expenditures, the rebuild or the build anew of the twin spans in New Orleans East that had been wiped partially away for I-10 connecting New Orleans East with Slidell, that bridge to the tune of another $1 billion was being replaced by a higher, stronger, new I-10 bridge across Lake Pontchartrain. All of that resulted in the state experiencing unexpected surpluses in their collections of sales tax revenues and income tax revenues generated by all of that rebuild economy. And the governor offered $100 million of that surplus to a program called the Louisiana Incentive Program to attract companies to our market, to start riding in competition with each other and providing, hopefully, more affordable insurance than was available by the state-sponsored market of last resort, Louisiana Citizens, which by law has to be priced above the most expensive coverage available from the private sector on a parish by parish basis. And so, and by the way, after Katrina and Rita, that residual market, Citizens, had swelled to 173,000 policies. And they were the third largest property insurer in the state of Louisiana, behind only State Farm and Allstate. And by the time Laura hit Southwest Louisiana in 2020, we had depopulated Citizens from that 173,000 policies, 10% of our homeowners market share, down to 0.5% of our homeowners market share, 35,000 policies. Unfortunately, a year after Laura, that had swelled to, primarily as a result of the insolvencies of the Florida companies doing business in our state, had swelled from 35,000 policies to 65,000 policies. And when they had that number of policies on their book heading into the last hurricane season, they went to the reinsurance marketplace, which is 2/3 located offshore from the US, and bought reinsurance for those 65,000 policies. Unfortunately, by the midpoint of that hurricane season, just about a year ago, their book of business, because of the most recent, at the time, failures in June and July of last year, failures of 3 more companies, their book of business had swelled from 65,000 policies to 130,000 policies. And under their reinsurance program, they owed an additional premium because the book they bought based upon had doubled. And that premium increase that they had to pay last October generated an increase in the premiums that they charged, Citizens charges, on the commercial side, which is only 10,000 of the 130,000 Citizens policies. of 74%. Spelled out in law, not in my judgment, but in fact, driven by the fact that their reinsurance costs had doubled. So a rate increase on commercial of 74% went into effect last January 1. On the residential side, a rate increase because of that increased doubling of the book of business at Citizens had to be increased by 63% at year end, affecting policyholders at their renewal each month as their policies came up for renewal. That led me to go to the governor and the leaders of the House and Senate, Speaker Schexnayder of the House and President Cortez of the Senate, asking them to do a special session of the legislature just 1 month before the regular session was to convene. And they, rightly so, asked me right at the outset, why a special session 1 month before we go into regular session? And my answer was, we can't wait. People are hurting. People are losing their homes because of these rate increases that the law required be implemented, driven by the huge increase in the book of business Citizens has, and therefore the big increase they had to pay for their reinsurance. And by the way, Citizens spends 90 cents of every dollar that they take in premium buying reinsurance, because under the law, their obligation is not to just provide coverage for everyone in the state, for every property owner who can't find coverage from the private sector. Their equal responsibility is to do everything in their power to avoid what they had to do after Katrina, and that is assess every policyholder from Shreveport to Grand Isle, from Holly Beach to Monroe, commercial and residential. Assess every policyholder for the first assessment that was done after Katrina and Rita is called the regular assessment, and it generated $250 million from all of us private sector policyholders to start paying the claims left behind by Hurricane Katrina. Citizens even then had enough reinsurance to cover their Rita losses, but was significantly inadequate in having cash and reinsurance sufficient to pay their Katrina claims. So they assessed everybody through their insurers to pay within 30 days, $250 million, 2 months after Katrina made landfall in Louisiana. And then I took office in February of 2006 after Katrina hit our state in August of 2005. And the first thing I had to do was go to Wall Street, to New York for a week, almost a week, 4 days, and huddle in a boardroom, meeting with one finance institution after another to promote and to sell a $1 billion bond issue, the second largest bond issue in the history of the state, a bond issue that's not backed by the full faith and credit of the state of Louisiana, but is only backed by the fact that the board has the duty and the obligation to assess every policyholder, privately insured policyholder, to pay whatever claims are left behind, but after cash and reinsurance is exhausted for the Citizens book of business. And to make matters worse, the leadership that was in place in Citizens at that time, and I terminated after taking office, was inadequately reinsuring, and worse than that, was incapable of operating a competent company to provide that residual market. And evidence of that incompetence, not to mention the fact that on a petty thievery basis, the CEO ended up in prison, but the incompetence played out in the fact that for the first 3 years I was commissioner, I had to give a waiver to Citizens on their statutory obligation to provide audited financial statements at year end for each of those first 3 years. And while giving those extensions, I was trying to sell Wall Street on trusting us to lend us $1 billion to finish paying our Katrina claims. Thankfully, and God bless her soul, she was a huge portion and reason for our successful recovery from the devastation of Katrina and Rita to our property insurance market. She joined me by speakerphone. We didn't have Zoom calls back then. She joined me by speakerphone for each of those interviews with the Bank of America, with Goldman Sachs, all of the major financial institutions in America. And thankfully, they took her and I at our words that we would be faithful in assessing the policyholders statewide sufficient to pay off those bonds. And I'm happy to tell you that we still have 3 years to go on the payout of those bonds. And my single largest regret about my upcoming retirement is that I won't be here to burn that last bond 3 years from now when we're finally finished paying off that $1 billion debt. But after we got financial statements 3 years later from the issuance of those bonds, we were able to go to the market twice and refinance those bonds, those outstanding bonds, and get lower interest costs for the policyholders of our state. So that leads me to what we did in that special session. And what we did in that special session, by the way, the answer to why we couldn't wait is because every month, 10,000 more people were being hit with that 63% rate increase on their homeowners insurance that they had to get from Citizens. And the other reason is, in order to participate in taking policies out of Citizens and affording cheaper than Citizens property insurance for citizens, for homeowners, for property owners in our state, companies had to increase their reinsurance buy in anticipation of taking on tens of thousands of more policies under the requirements of that incentive program. But the legislature accepted our argument on a broadly based bipartisan basis, made $45 million available to give out in grants of between $2 million and $10 million. 8 companies applied for $62 million, and I actually avoided having to give a haircut to the 8 companies asking for the $62 million when I only had $45 million, because of those 8 companies asking for that $62 million, they only qualified under the enhanced solvency requirements of the incentive program. They only qualified for $42 million of the 45 we had available. That money has been distributed. Those companies began writing in April, and as of June 30th, I'll get another report tomorrow as of July 31st. But as of June 30th, those companies had written 23,000 new policies, and that generated $75 million in new premium written by those programs, by those companies. And notably, the top 5 parishes they wrote most heavily in are Jefferson Parish, 4,660 policies, Orleans Parish, 1,988 policies, St. Tammany Parish, 1,937 policies, Terrebonne Parish, 1,766 policies, and Lafayette Parish, 1,280 policies. And just as the incentive program after Katrina and Rita was designed, this incentive program requires anybody that gets a grant under the program, using SafePoint as the example, the most active writer of those incentive companies. A company out of Miami, Florida, with over $50 million of assets available, capital above their obligations and costs and expenses. That company asked for and got $10 million of grant money. The requirements of the program said any grant recipient, SafePoint, for example, that got $10 million had to put up $10 million of additional capital that would be earmarked for this program and put aside, escrowed, if you will, matching the amount of the grant, totaling $20 million. And they had to agree to write 2 times that combined amount, or $40 million of new premium. And they had to stay on that coverage for a minimum of 5 years. It worked after Katrina and Rita. We got 5 companies when we offered $100 million to access 29 million of it. They primed the pump, I refer to it, that resulted in 24 other small regional companies coming to our market after they saw those 5 takeout companies, incentive grant recipients, successfully writing business in our state, as the major national companies were withdrawing not just from our coastal exposure, but from all coastal exposure, from New Jersey to Miami, Massachusetts actually, to Miami, and around the coast to Mexico. Those 30 companies, with the exception of the 3 that failed, have been responsible for, through their competition, before the 5 years before Laura hit Lake Charles in 2020, all the overall cost of homeowners insurance increased by only 1% per year each of those 5 years. But getting back to that, those 5 recipients of the grants in 2006, 2007 did write the required amount of premium, but some did not stay on it for the full 5 years, or I'm not sure which, or did not write the full amount. And they agreed, as we monitored them for their writing on a monthly basis, that they owed a payback to Louisiana of 4 million of the 29 million that had been asked for and granted. We offered the remaining 71 million to the market nationwide and had no takers. So that first offering of 100 million and distribution of 29 was the extent of the program back then. Our first offer this time was 45 million, which the governor asked me, why 45? I said to him in answer, I asked my chief actuary to take the 29 million that was given out last time, apply the CPI to it for the 17 years since, and it came to 45 million. He accepted that. They funded it to that tune, and we attracted 8 companies that have now, through June 30th, written 23,000 policies with $75 million of new premium being granted. So it has worked so far. I am very optimistic. When I spoke to the legislature during that special session, called for that one bill to create that program to jumpstart our recovery rather than wait for the regular session and miss the opportunity to buy additional reinsurance to participate in the incentive program. We're now significantly on our way to matching what happened in the first year after the incentive program in 2007, and that is 40,000 policies were written out of Citizens in the first year that program was in effect. I think we will have a similar number of policies written out of Citizens, 40,000 off of what is now 130,000. That 40,000 back then was off of 173,000. So we'll be well on our way to recovery of our market, I do believe, by the end of this year. Let me move to that. That's the short-term answer to our ongoing crisis. The long-term answer is also copied from another successful program, and that's called the Fortify Homes program. And it's copied not from what we did after Katrina and Rita, although we took a major step forward in making our market more attractive to insurers in the special session called by Governor Blanco back then, and that is creation of a statewide building code. Only half of our parishes, mostly the urban and suburban parishes, had a building code back then. All 64 have it now, and all the credit for that goes to Governor Blanco, who really, really stuck her neck out and made that happen, even though in rural parishes, it was very unpopular because they didn't have permitting offices, they didn't have inspection services, and they didn't have budget room to fund the creation of those offices. She took $20 million of the CBDG grant money she got from the federal government and made grants available to those parishes that didn't have a building code to start up one. And if she had not, the contractors came to the legislature the next year with a bill that would have shot a giant loophole into our new building code by saying if a contractor certified that he or she had built to the standards of the new building code, that was all you need. No inspections, no permits were necessary. Self-certification would be sufficient. That would have worsened our market for the tens of thousands of homes that would have been built or have been built between then and now without any oversight for that construction versus our new statewide building code that we forestalled, we held off that loophole bill by one vote on the floor of the House of Representatives out of 105 members of the House of Representatives. But Fortify takes the standards for construction up beyond building code. It started in Alabama 4 years ago. They've been handing out $3 to $4 million a year in grants on a first come, first served online lottery basis that gives grants of between $2,000 and $10,000. They all end up being $10,000 to lottery winners to take their existing roof off, no matter the age, and put a new fortified roof on, certified fortified roof in its place. And what's better about certified than building construction is two things. Number one, the contractor has to use what's called ring shank nails. Think a combination screw and nail, and it is used to fix the metal roof sheets, metal sheets on a roof for those putting a metal roof on their property, or for fixing the shingles onto a roof for those using an asbestos, as most homes are built with asbestos tiles. And those more firmly affix the outer covering onto the decking of the roof. Under that top covering of metal or asbestos shingles comes a second layer or a second protection. And it's adhesive plastic that covers the entire decking, generally made of plywood. And when you put a decking on with plywood, they're nailed onto the rafters next to each other, but they're not waterproof where they touch each other. And if the shingles or the metal roofing comes off and the rain continues to pour, the water flows freely into the home beneath the roof, and then the cost of that clean goes up 90% versus not having it penetrate and just having to replace the roof rather than the interior in addition to the roof. So as of October of this year, we will be going live online with a lottery to allocate $30 million for Fortify that was appropriated in the just concluded session of the legislature. And that means that we'll generally have $10,000 per roofs put on with two certified fortified standard. And that will make those roofs much more attractive to insurers. In fact, that grant authorization came with a mandate on insurers that they file with us their discount that each company would offer for those who have a certified fortified roof in place. And that our observation and overall view of the discounts that are being filed indicates to us that on average, a typical, don't want to call it average, typical discount will be around 23% for having built to certified fortified standards your roof, basically replacing your roof. And in addition to that discount on your homeowners, the cost, I'm not sure who did the study, but someone in Alabama recently reported after a study that the increased value of homes with a fortified roof, and by the way, when you get a certified fortified roof in place, you get a certificate as the owner that is transferable upon transfer of change of ownership of that property. The study indicated that having a fortified roof increases the value of a home on average by 7% in resale value. That's an additional benefit in addition to the discount, 23% savings on your homeowners coverage. In Alabama, in the 4 years that they've been giving out the grant money, they now have 36,000 homes with certified fortified roofs in place. The program started in just Mobile and Baldwin counties. It has now spread to Birmingham and Montgomery and is extremely popular. The 6,000 that got grants, the notoriety and the publicity of that program has resulted in 30,000 others not winning a grant, doing it out of their pocket themselves, or new construction being built to that above building code fortified standard of homes, totaling 36,000 in Alabama alone. North Carolina started copying Alabama about 2 years ago, started in the Outer Banks. It has spread inland now. They have about 20,000 homes built to certified fortified roof standards as well. Moving on, we believe that this program will make our market much more attractive to insurers looking at doing business in states. By the way, as an aside to that point, last fall, I went and was joined by 2 lawyers, one representing in Louisiana, Lloyd's of London, the other representing the small regional companies writing homeowners in our state. Visited with Lloyd's, visited with the IUA, International Underwriters Association, the half of the Lloyd's market, not part of Lloyd's. And then when I was reported in the insurance press for having visited with Lloyd's in the IUA to promote our market, I got invited to Bermuda, which is the second biggest reinsurance market in the world, to pitch to their ABIR, ABIR, the Association of Bermuda Insurers and Reinsurers, recovery or the appeal, the attractiveness of our market. And one of the things that I emphasized to them, to their nodding in agreement, is, look, you guys do coastal exposure all up and down the Atlantic, all around the Gulf Coast. Come to Louisiana. We now have, for everybody from Texas to Mississippi that wanted a new roof and needed a new roof, has a new roof. You paid for it all. You spent $24 billion putting those new roofs on properties all across our coastal below I-10, I-12 parishes, and take advantage of that. And they acknowledge that. And I do believe it was helpful in getting reinsurance coverage for our companies that are so dependent on it in order to be able to write property insurance in our state, with its exposure being so great to hurricane events. Finally, flood insurance. I don't do that. That's a FEMA program called the National Flood Insurance Program. The rules are set by FEMA with oversight and approval by Congress. There's a big tug of war going on between Congress on a bipartisan basis, pushing back on a program called Risk Rating 2.0 that brings with it humongous, as my granddaughter would say, rate increases for the cost of flood insurance. And there's a divide within the 50 states, with the fiscal hawks wanting to put the program on a 5-year glide path to actuarial rates. And if that were done, as was originally proposed in Biggert Waters some 12, 13 years ago, it would render thousands of properties in our state of Louisiana, primarily in the coastal parishes, worthless overnight, because the cost of flood insurance would be prohibitive. And without flood insurance, tens of thousands of properties wouldn't be able to get a federally backed mortgage, as 95% of mortgages in the US are backed by Fannie Mae and Freddie Mac. So Risk Rating 2.0 is quite the challenge. Our delegation is unanimous in our support for rolling it back, as they rolled back Biggert Waters some 12, 13 years ago. And I'm hopeful that they'll be able to do so again. The biggest help 12 years ago, when we rolled back Biggert Waters increases, was Superstorm Sandy and the effect it had on properties in New York, New Jersey, and Connecticut, bringing both Republicans and Democrats to our side, and Florida's side, and Texas side generally, Mississippi and Alabama as well, in trying to keep flood insurance affordable and available for those in our states needing it and not being able to afford it under the rates being proposed through Risk Rating 2.0. With those things said, I think I spoke for the 45 minutes I was asked to do, and I'd be happy to try to answer any questions any of your participants would have, Ms. McGee.
Thank you, Commissioner, for all that wonderful information, a lot of information to take in. So now we'll turn it over to our attendees to see if there's any questions.
Hey, Commissioner, this is Peter from GNO Inc. Great to
Hi,
see you,
Peter.
and thank you, as always, for your informative presentations and great summary of the state of insurance in Louisiana. We've been talking with the Home Builders Association about wind mitigation surveys, and they've put together a list of surveys of discounts received in the past few months because of these surveys. Can you talk about the wind mitigation discount opportunities through these surveys?
Sure. And they've been focused on commercial property, but they offer credits and or discounts for wind mitigation features that have been incorporated into construction of commercial property. With that said, commercial policyholders really need to contact their respective insurers for details on each individual insurer's discounts that they offer. I recently spoke with a consumer, this was on the homeowner's side, who was complaining about his or her, I can't recall, huge increase, 30% increase in the cost of their homeowners insurance. And when they reached out to their agent and complained about it, the first thing the agent asked in order to equip himself for shopping for alternatives, cheaper alternatives for that customer, was, how old is your roof? And it turned out, just by coincidence, it was just 4 or 5 years old, which entitled under that company's discounts a significant rate decrease just for that additional information. And then they went from there, tie downs to the slab of the home, strengthening the windows to hurricane wind resistant speed that I did, frankly, in my home in Metairie some 10 or 12 years ago, which also brings with it a discount under most companies' available coverage and pricing for that coverage. Those are just two of the examples of things that are available for discounts. That particular consumer ended up, when they got with their agent and stayed with the same company, getting their renewal for less than they had paid the year before when they were facing a 30% rate increase. Let me add that 30% rate increase in that case was a rate increase, but a lot of the cost, increased cost of insurance affecting us, but frankly, all 50 states, is documented in a study the Insurance Institute did here 4 years ago. And it said nationwide, 61% of properties are insured properties, 64% of insured properties are underinsured for their actual replacement costs. And in addition to that, the underinsured cost for those 64% of property owners is 27% on average. Add to that 2 or 3 years of 2 or 3% inflation, puts another 10% on that 27%, putting it at about a third cost increase without a rate increase. And I will admit that over the past 2 years, in 2021, after Laura in 2020, rates went up 6.5%. And in 2022, last year, as a result of Ida, rates went up an additional 18.5%. The effect of that was the cost of reinsurance for those companies. Before that, for the 5 years before 2020, rates were just going up 1% per year because we had a very soft, competitive reinsurance market, and we had not had any hurricane events to spike the cost of reinsurance in the 5 years before Laura hit us in 2020. So there are multiple wind mitigation discounts available, varying from one company to another, but they are well worth asking your agent or broker, in the case of commercial, generally through a surplus lines broker, such coverage is obtained, what is available and what steps you have taken that you think would make your property more attractive to insurers than the typical property in your particular zip code.
Awesome. Thanks for that explanation, Commissioner.
By the way, Peter reminds me of our working relationship during the last session with GNO Inc., during which we were successful in 2 major defensive moves that we had to enact or undertake to protect our market. You know, we always like to talk about the things we're trying to doing to improve it, but at the same time, we have to do no harm. And the insurance industry, truthfully, has long hated a bill that was passed in 1992, unique to Louisiana, but absolutely vital to our homeowners market. And it says that for a homeowner who's been insured by their homeowner's insurance company for homeowners coverage for 3 or more years, they are married, their homeowner's insurer and that policyholder, for as long as that homeowner's insurer does homeowners business in the state of Louisiana. They can't change your premium, they can't change your deductible, they can't cancel you for as long as you are still insured by that same company. There's a couple of exceptions. If a company, as Louisiana Farm Bureau said publicly after Katrina and Rita, if they say publicly that they are in danger of insolvency, the commissioner can grant a waiver and allow them to non-renew, as my predecessor did, rightly did, 9,000 3-year-old coastal parish policies that Farm Bureau felt the need to get off of. You also have to keep your property up to the condition it was in when first insured. You can't let it deteriorate. But doing those things, which the overwhelming majority of folks do, that 3-year rule is invaluable. In fact, during the recent special session of the Florida legislature held last December to address their homeowners crisis driven by litigation over roof repairs brought by lawyers in the state of Florida, resulting in 12 companies becoming insolvent in that state. The industry supporting that special session initiative revealed a study they had done 2 years prior. Of the 8 largest national insurers for homeowners coverage, doing business in both Florida and Louisiana. In Louisiana, they have 61% of the homeowners market in our state, whereas in Florida, free to come and go as they want, and non-renew and stop writing, renewing policies in any parish, county or area of a county in their sole discretion. They have only 25% of the homeowners market, same 8 national companies. I wish I could take credit for that. It's our 3-year rule, and it's absolutely invaluable to our market. In fact, when I met with the governor during that session to solicit his support, which he was quick to offer, I said, Governor, if we lose that fight, not in my lifetime, I'm 78 years old, but in your lifetime, the state will be insured for hurricanes by citizens, and the state can't afford that. 26 billion plus 26.5 billion after Katrina and Rita, 24.5 billion after Laura, Delta, Zeta, and Ida. The state cannot afford that. And so he was helpful. And the other bill that the insurers proposed during that session was to repeal our prior approval system of rate regulation, which is common in 20 states. And another 20 states have what's called file and use, which is a slightly different, less rigorous rate oversight than prior approval. But what the industry wanted was use and file. And what that means is they can implement whatever they want. And unless the regulator finds something contrary to a statute or a law, they are good to go, can use it. If a regulator finds something wrong, they have to recall all of those policies, correct what the regulator found wrong, and then reissue it. I've been commissioner for 17 years. I'm sure someone in those 10 use and file states had taken that step, but I'm not aware of any. It basically amounts to unregulated rates, which we have in the surplus lines market in all 50 states, where they go, I call it, where others fear to tread. After wildfires in California, hurricanes in Florida, they go in where the other companies, the admitted companies, the standard companies, are pulling back, not renewing, not writing new business. The surplus market, think Lloyd's of London, goes into that vacuum and provides coverage. When the big boys and girls return, they go elsewhere to another opportunity for a troubled market. So there's not just efforts necessary on the proactive or initiative or new innovative approach to our crisis, but there's also equally the need to protect those things that we have that are invaluable to our market at the same time. And G&O Inc. has been in the forefront of making those things, the innovative happen and the important be protected.
We will certainly preserve your legacy next session, and your words will be in the back of my head. Thank you.
Thank you so much. Appreciate that, Peter.
And thanks, Peter, for helping me coordinate and facilitate this meeting with the commissioner.
Of course, Margaret.
So with that, do anyone else have a question? Okay, looks like you did an awesome job with presenting this information. If there's no more questions at this time, I want to thank everyone for joining today, especially Commissioner Donilon, and congratulations on your retirement. I'm pretty sure you will enjoy it.
I'm looking forward to it, but I will miss this opportunity that has been granted to me by the voters of Louisiana across my almost 50 years in public office to serve the people and make my contribution to making things better as best I can. And we think we've done a lot of good things, and we leave it better than we found it. But certainly there's much more to be done as we are experiencing in the ongoing crisis.
Yes, well, we thank you very much for all your hard work.
Well, thank you.
So within 5 to 10 business days, this session will be available on the Office of Economic Development YouTube channel, along with previous recorded sessions. Our next session is tomorrow, August 31st, and our speakers will be representative from NOLA Ready. Remember to check all emails for reminders, and I hope everyone will join us again. Again, thank you so much for presenting for us today.
Thank you, ma'am.
Everyone have a great day.
Thank you. Have a good day too.